For a long time, deciding to work in sustainability came with a very specific mental image. People pictured working outdoors, preserving nature, or perhaps running campaigns for an environmental nonprofit. That image is disconnected from the 2027 job market. Today, corporate sustainability is a highly regulated, data-heavy core business function. It operates through spreadsheets, legal disclosures, and risk modeling. The transition has moved past simple emission reductions. Corporations are now fusing environmental objectives directly with their artificial intelligence and digital infrastructure rollouts. This creates a direct contradiction. Companies rely on AI to optimize power grids and automate supply chains, but the resource-intensive electricity and water consumption of hyperscale data centers creates an immediate carbon compliance risk. Because of that complexity, companies are integrating environmental skill sets into everyday operational roles. In fact, over 53% of all green hires globally are now placed in positions that do not even have the word green or sustainability in the title. A personal passion for the environment will no longer get you past an initial HR screening. To survive and advance in this new economy, you have to be technically and commercially fluent. This structural shift has created an industry-wide bottleneck. Companies are searching for professionals who can execute these technical tasks, and the market simply cannot supply them fast enough. This data shows the divergence. Global green hiring demand is growing at 7.7% annually, nearly twice as fast as the rate at which workers are acquiring these skills. That widening gap forces corporations to pay a substantial salary premium to anyone holding verified technical credentials. But knowing the money is there creates a dilemma. A generic list of the top 10 green jobs is useless to you if it suggests becoming an ecologist when your entire career background is in corporate accounting. The most effective way to capture that salary premium is not to throw away your resume and start over. It is to look at the new green career tracks and identify exactly which one aligns with the professional background you already have. We can break these opportunities into 4 distinct tracks. Let's start with track 1, the finance and risk quants. This path is built for traditional bankers, actuaries, and risk managers. The target roles here are positions like climate risk officer and sustainable finance manager. To make this transition, you need deep financial stress testing skills. You bolt on specialized credentials, like the CFA ESG certificate, to learn how to model the financial impact of extreme weather events on corporate assets. The payoff is significant. This track gives you access to the highest-paying sector in the green economy. Global medians sit at $124,000, with senior directors scaling past $300,000. The trade-off is the environment. You are operating in high-stress capital markets, navigating complex and often unstandardized global disclosure frameworks like the ISSB. You are not here as an activist. You are here to price physical climate risk into global markets and protect corporate portfolios. Next is track 2, the data and tech architects. This is designed for software developers, database managers, and IT professionals. Key positions include the sustainability data engineer and the environmental ESG data analyst. You need hard technical inputs for these roles. Candidates must master Python, SQL, and the orchestration of automated ETL data pipelines. Because of the energy challenges created by AI infrastructure, these roles command significant tech sector premiums. Senior engineers are earning upward of $170,000. But consider the reality of the work. You are disconnected from the physical environment. Your daily focus is strictly on building auditable corporate database pipelines to satisfy government regulators. For major technology companies, the most critical green hire is often a specialized software engineer who can provide the data necessary to withstand an environmental audit. Track 3 is for the builders and operators. If your background is in traditional engineering, supply chain logistics, or real estate, this is your path. This includes roles like renewable energy engineer, green building project manager, or sustainable supply chain manager. To understand this track, look at the scale of the physical infrastructure required. We mean grid modernization, global supply chain mapping, and vast capital deployment. The strategy here is additive, stacking a specialized credential, like a lead AP, onto a traditional construction or engineering degree results in a base salary bump of $8,000 to $12,000. This track offers the most direct physical impact on global emissions. However, professionals are exposed to volatile construction markets and unpredictable supply chain bottlenecks. Finally, we have Track 4, the specialists and executives. These roles represent the absolute highest barriers to entry in the green economy. These are positions like the Chief Sustainability Officer, the Carbon Accounting Specialist, and the Biodiversity Specialist. The requirements here are intense. You need a specialized sustainability MBA for the C-suite, distinct CPA carbon training to audit emissions, or a rigorous spatial ecology degree for biodiversity modeling. Carbon accounting specialists command an estimated 12 to 18% salary premium over traditional corporate accountants, and executive compensation packages for CSOs frequently exceed $420,000. You cannot pivot into these roles quickly. They demand either decades of corporate governance experience or highly niche academic backgrounds. For those who invest in this level of specialization, these roles offer direct access to the board and the authority to shape long-term capital allocation. The core strategy is simple. Do not abandon your current profession to get into sustainability. Bolt sustainability compliance onto your existing skill set. This framework maps exactly how you make the transition based on where you are starting from today. If you are an accountant or a risk analyst, targeting the GARP SCR or carbon accounting certificates allows you to capture that 18% salary premium. If you are a software engineer, learning ESG data taxonomies allows you to pivot into sustainability data engineering. If maximizing income is your primary driver, consider the sectoral gap. Global salary medians for sustainability managers in the nonprofit sector are $62,000, significantly lower than the $115,000 offered in the energy and financial services sectors. The winners in the 2027 labor market are technical, data-driven professionals. They succeed because they can translate complex environmental rules into corporate resilience and profit. Passion for the environment might spark your initial interest, but your technical credentials are what will secure your premium. Pick your distinct track, acquire the specific certification, and execute the pivot.